A credit card is a loan that can be used at the borrower's discretion and convenience and has flexible repayment options. It's generally essential when renting cars, reserving hotel rooms, or booking airline and other travel tickets. Responsible use of credit cards can also help build your credit score, which is going to make it easier to qualify for other loans such as auto loans and mortgages. So let's say you have a $1,500 balance on a credit card that charges a 23% interest rate. Let's also assume that the minimum payment on the credit card is calculated as 4% of the outstanding balance, or $25, whichever is greater. If you make the minimum payment every month, it will take more than 6 years to pay off the bill. This means that you'll end up paying the credit card company more than $1,000 in interest in addition to the $1,500 that you borrowed. Instead, if you selected a credit card with a rate of 15% instead of 23%, you would pay off this same bill in 5 years and pay about $500 in interest. If you had that $1,500 balance at a 23% APR and your minimum payment is the greater of 4% or the outstanding balance, 4% of the outstanding balance or $25, then by only making the minimum payment, it would take 6 years to pay off that $1,500. But if you decided to pay about $141 per month, you would be able to pay off the outstanding balance in 12 months and save more than $800 in interest. A cosigner is an individual in addition to the borrower who will be held responsible for repayment of the debt. If a borrower lacks a credit history and has a lower income, lenders are much more willing to approve the application if there is a cosigner with a strong credit history that guarantees prompt repayment. There's another way to obtain a credit card. Banks and credit unions often offer secured credit cards. This provides a way to establish credit without a cosigner. It requires the borrower to deposit the full amount of the line of credit at the bank as collateral before the credit card is issued. So let's say Xavier has no credit history and knows it would be difficult to get a credit card. He does not want any cosigners, so he talks to his local bank about ways to establish credit. The bank tells Xavier that if he's willing to deposit $500 into an account and not have access to that money, then the bank will issue him a credit card with a $500 credit limit. Xavier agrees to this and begins to use the credit card for small purchases. He pays off the credit card in full each month. If Xavier misses a payment, the bank will deduct the money from the account and most likely close the line of credit. Xavier should verify with the lender that it is reporting his payment history to the credit bureaus. Within a year, Xavier is able to qualify for a traditional credit card because of his good credit history, and he closes the secured credit card and receives his $500 back.